Hello traders, welcome back. Go ahead and before we even get started, drop that like, drop that sub. Hope you guys enjoy this, and let's get started. So here we're looking at the SPY daily chart, the S&P 500 ETF, and last week I mentioned that certain indices were showing weakness, namely the IWM, the DJT. We wanted to look and keep an eye on this DJT wedge that was forming. I actually had the line drawn from here to here, like so. And so we have broken out of that, but one thing I noticed is that we weren't really getting follow through. And if you get a break, you want to see that follow through. And we weren't really getting it. And so what I did was I threw some fibs up on most of my charts, simply from the last low we made up to the highs. And I noticed that most of them were not breaking the 50% retracement, and the SPY was actually not breaking even the 32, or the, sorry, I have these done wrong. Hold up, it's on a different chart. There you go, 38% here. So typically when you get a move, an impulsive move, and you pull back to the 38.2, and you can see this was also an important zone that I had marked from when we dropped. We came up, tested it, and fell away. We came up, fell away, got above, and now it's support. And so when you see a market that comes and has an impulsive wave and then retraces to the 38 and immediately reversal candle, and we're going to talk more about these golden zones too, and where we closed was above the golden zone. That and a few other things are leading me to believe that we have some short-term upside in the market, potentially up to this 290 to 295 area, potentially slightly higher. It's tough to tell at the moment. The market has been building up energy, but who knows if it's going to trickle up or if it's going to really zoom up. My guess would be more of a trickle, but it's tough to tell at the moment. We'll go through other reasons why I think there can be short-term upside. But we did get that, we did get that top. We put in a pullback. We have to realize that that can be resistance again, likely will be. And maybe we pull back here, we hit this top, we pull back here, and then maybe we make one more move up before we look for a potential larger top, potential. And I have to keep saying that because you don't want to guess. And I said this last week. You really have to be patient when you're waiting for a bear market breakdown, if you even want to call it that anymore. This is essentially a new bull market at the moment until we have seen otherwise. And anyone that's too caught up in the media or not experienced with trading, they're going to laugh at that. They're going to dislike the video, but that's just how it is. That's how trading works. You have to play the charts. There's too many factors that the street is looking at, and the Fed is just, they're blowing in money, and you never know what kind of sentiment people are going to have. You just have to follow it, right? Follow the volume, follow the market. So with that being said, these golden zones, they are taken from a weekly chart, and these are kind of just zones that I believe are the most important price levels to the market in this area. And it's pretty easy to see why. This is an area that the market really fought around. You can see every time it gets near it, it kind of stutters. It either rejects or maybe, here's a fake out. You get up there, you reject, get over, you come back, test it. Maybe you get a little below, but then you get back up, and then you're testing it again and getting close to it again, right? And as we've come up here, you can see just from a daily that it's still been incredibly important, right? We came down, we broke it, we're trying to save it, we open right in it, and we reject it. Look at all this price action fighting it, right? It's a very, very important area to the market. And so I think being above this has to be short-term bullish. The fact that we closed the week above that, I think, is solid. Now, if we gap down, okay, then we're probably going to see these lows again. Now, if these lows get taken out, this is where we can really see some damage start to happen. I think last week, remember, I noted that here's Friday. I said if we took out Friday's lows, watch out below, and what happened? Right, we took out Friday's lows, then you have the gap, but we gapped under the gap. This open gap here, we gapped under. So what does that tell you? The next destination, okay, sorry about that. The next destination is going to be this zone here. And that's exactly what happens. So you short the rip in the morning and you get that nice profit on the down move. Now, you don't want to get too bearish here, right? Because you have to know your levels. Are we under this important zone? Are we under the, a fib? Are we under something? Did we close under something? No, we just closed inside of a support. So no surprise if we get a gap up. They fool bears. Everyone thinks this is a breakdown, but look at the volume. It's not very high. It's not a very big bar. It doesn't break any important levels, and those are all things you have to keep in mind. When you're intraday like this and you're seeing, oh shit, this looks terrible, right? And it's just bear flagging. It's bear flagging. No, it's a trap, and volatile markets will do that a lot. So if you're not convicted on a swing, I have not been swinging barely at all in here. It's really not worth it. Maybe pick some individual names that can be good for swings. There's a few. If you focus in the right areas, there can be a few, but try to stay away from the general market and stocks that move with the general market that are not showing severe relative strength or weakness during times like this. And so the next area on this chart where we can see resistance again is going to be up here. This is really where the breakdown kind of started. This is where we found our first bottom. Maybe we overshoot that slightly, and maybe I'm wrong. Maybe we just come up here and we really fall out of bed. That's totally possible too. But let's go to some other charts, and I want to kind of show you why I'm thinking we can get this. Here's the IWM, and the IWM has been in this pennant right here, right? We've just kind of been coiling energy. And we've been above the recent high, just coiling energy. And typically that's going to be a bullish sign, right? You're holding the support and you have this pennant type pattern, and boom, Friday, look at this, right? You have lower, 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 lower. All of a sudden, you're up, you're at the highest close within the last week and a half. And it looks to be trying to head higher. Now, I'm not going to say it's going to get very far. This is a bit similar to the market. I think there's a huge zone on the IWM where this weekly trend line will come in. So that's going to come in right here. And there's also a pretty big zone. And I don't want to say I'm too sure, right? I'm really not. I'm playing this market day by day for the most part, and I think most people should be. Mainly because you don't know when a big sell can come out. You don't know when the news cycle can all of a sudden change, and that's the risk of this market. And so no matter what you think about your technical analysis or your fundamental analysis, it's smart to be just careful in this kind of market. But yeah, I think the IWM looks like it can try and head up to that trend line here, and maybe this zone. We've got a breakdown candle right here, and we're holding above this zone. Right, this is where the market gapped down to, couldn't get above, couldn't get above, couldn't get above, and we're kind of messing around with it, but once again, we finished the week above it, and we're holding 2 days now above it, and we're breaking out of a little pennant here, and I think this wants to come up here and test this area, guys. So this is a market leader, and this is telling us something right now, that the market could be headed for a short-term little rally here. DJT is another good market leader, transportation average, and this one obviously has been weaker because of the fundamentals of the coronavirus affecting transportation and travel stocks. Excuse me, but yeah, we're still in a pretty defined flag here. wedge here, and nothing says that this can't break up. Nothing says that this can't break up. But we do want to keep an eye on it still. We want to make sure that we're getting like a confirmed big volume, big bar sell signal out of this to the downside. If you want to put on swing shorts, it has to be a convicting sell signal. Not this, not this. It needs to be this. It needs to be this, high volume, okay? That's what needs to happen here. Now, one thing that's interesting to me is that I noticed the volume is actually getting larger up here. You know, I'm not really sure why that is. It's a bit interesting to me. It almost looks like volume is coming in and maybe shorting, but maybe also buying. It almost seems like there's kind of double-sided volume here. It's a bit tough to tell without other tools to maybe track what is buying and selling. But nevertheless, we're in this pattern. It has room to the upside, just like other markets are showing. And it's holding kind of this trend line here. So keep an eye on this. Keep an eye on if this is breaking down and if it's a convincing sell signal or not. Okay. I think this would be the zone that the DJT would want to go up and test. And so again, it almost makes sense for this to kind of creep up to that zone, maybe hit it one day and reject. That's kind of what makes the most sense to me. But again, you have to look at this as it's a bullish pattern, right? You get an up move. Short term, it's a bullish pattern, right? And you get a little flag, and then you look to break out of the flag, and it's short-term bullish, right? And what are we doing? These gray lines here, these gray lines here are a very important zone to this market. And so similar to other markets, we're kind of going back and forth, fighting this zone. And once again, we've closed daily above that zone at the end of the week. So I think that's important. I think it's something to note. I think it's important to note, are we right back down at the beginning of the week? Are we having a gap down below the zone, below the wedge that we have? That's incredibly important to know at the start of the day. Are we gapping up over this resistance candle here? Does that give us room to have a rally day up to the top of this? These are things that you should be looking at. These are things, if you're playing the market, if you're playing anything that moves with the market, which most likely will during this time, you need to be looking at this kind of stuff to see where the market's going each day. Okay, SMH. Here's your semiconductors. These were really strong. They've kind of pulled back, but you know what? They're right back up. And so these are still stronger than most other sectors. Technology is very strong right now. And, you know, this is off the 50% fib from this low, go up, 50% retracement, and immediate high volume reversal, closes at the highs. You get another down move, another reversal. What does this tell you guys? This is very strong, and I think this is going to rally up to this zone, guys. Maybe you get a day or two of consolidation here, or maybe you just bust through immediately, but this looks ready and prime for this area right here, guys. So watch AMD, watch NVDA. These look like they could be primed for a move, guys. I'm not saying they're going to for sure, right? Some of these are a little sketch. NVIDIA's fighting the trend line. AMD looks rather good to me. I'm not really sure what these trend lines are, but AMD looks pretty good to me if we can get over this resistance candle here. And yeah, NVIDIA, there's not too much of a setup there, but watch some of these chip companies. AVGO, that's a good setup here. Watch for that to explode potentially. up to these highs. That's a nice little bullish flag. And I'm not saying that it can't roll over, it can, but watch for, a break up here, right? Follow the market, let the market start coming up. Look at it. Is it nice volume? Is it explosive? And then wait for a little pullback to here and play it up, right? So always wait for the market to come to you. Don't just guess. But yeah, guys, tech is looking strong. Let's look at the Qs. One interesting thing on the Qs is we are still, and we're still below a pretty important trend line. And so I'm noting that. And again, this is why I'm getting mixed signals. You get the IWM and DJT that on a big picture, they're lagging. They're not as high in their retracement as the Qs, as the spiders. But they're breaking out or look to be headed up short term. And they actually have been leading the last 2 days on the upside. And so that's why you want to look at that and say okay, well, maybe we can get some short-term upside, but these market leaders are still really, really lagging. The XLF as well, which the market cannot go anywhere without financials. And these, I think, have been one of the weakest bunch. I mean, if we throw, I'm sure they're probably battling the 50% right here. So they've actually come down to the 61. They finished the week above the 50, but look at that. They're not even above their prior resistance. They've been below it all week and kind of close just inside of that, not above. So XLF looks really, really weak. Can this potentially start to catch up? Or is this trying to really tell us something? I think an important zone here to watch on the XLF, and why I have this marked here, is right here. If the XLF kind of breaks out of this low basing pattern, here's your big, big, big support. And the reason I say that, it's more of an inflection point rather than a support. So what I mean by inflection point, when the market is underneath this area, it's typically more bearish, and when it's above this area, it's more bullish. So you can see as we get above this area, dips start to be bought and the market moves up. But when we're under this area, the market really struggles. You get red candles, you're rejecting this area a lot. Here you gap under and it's hard for the market to get back up. It has to actually gap over the area. Look at all the gaps, right? Look at all the gaps that are around this area. That's how you know an area is very important. When one specific zone or area just has a ton of gaps over and under it. So watch this area. If we get below this at all, that's definitely a tell. And then, getting back above this is really the key right now for the XLF. Can we get above this and challenge the highs once again? Yeah, this is really weak, and this is not good for the market. So this is not something you want to see if you want to see a market recovering. This is typically indicative of more downside coming. But that can be a while. You don't know. We can go test the all-time highs. We can go test 300, 310 in the SPYs, and this can kind of just grind up. And while the SPY's up here, the XLF is here, and then you fall. So you don't want to get too ahead of yourself, especially if you're trying to swing. Don't get too ahead of yourself. Again, I'm not really swinging in this market. I don't think it's the right thing to do. Let volatility die down. Play intraday. Play the earnings moves. Right? Focus on stocks that are having earnings and play that aftermath, right? Have some fun with that. But this is really difficult to predict right now. So basically, long story short, guys, the market looks like it could be headed for a short-term move up. This would be my key zone, which would be about 291 to, let's call it 296, 297. That's our key zone. And on the downside, this is your key support, 271, guys. This zone, 271 to 275. If that gets broken, that opens the gateway to 263, and on a larger drop, potentially that 245 area. Okay. So hope this helped you guys. Have a great weekend, and please share if this can help anyone else you know. All right. See you guys in the next one. Peace.